Hello everyone and welcome back to this series of videos on the Solow growth model. Specifically in this video, we are going to focus on how capital evolves. So until now, in the previous 12 videos, we've been focusing on the building blocks for our Solow growth models, the assumptions, the equations, how the equations work, why do they look like that? Well, now we are going to move our focus to actually understanding what can we derive thanks to the Solow growth model. What are the improvements and the understandings that we can get from the mechanisms of this beautiful macroeconomics model. So to begin with, from video 5 in this playlist, let's remind ourselves the capital accumulation equation. So how does capital actually accumulate in the Solow growth model? So we are looking at what capital looks like tomorrow, so in period t plus 1, using information from the current period, so in period t. Specifically, there are two main building blocks in this equation. And again, while we've already derived it in video 5, here we are actually going to interpret it. So the first building block, the one that I'm circling in pink, or that I'm making a square around in pink, it shows the new capital. The new capital that is being purchased, the new machines that are being acquired by a company in order to incentivize production. Well, why does it show the new capital? Let's remind ourselves that we said that in such model we have a closed economy, we have no government intervention, and one of the implications of such assumption is that savings in our economy equal the level of investment. So if we look at this part of the equation, we have the savings rate showing how much, what is the proportion of funds that is saved, times this part that shows output. So this bit here, so the total factor productivity times the production function that basically we're saying that output is produced thanks to capital and labor. This part shows our output. And since we said that a proportion of the output, so we know that a proportion, so a portion of the output, is used as investment, plus the fact that savings equal investment, we can derive that investment is going to equal to savings, which itself equals small s, which is the savings rate, times output. So our investment here is equal to savings rate times output, which is exactly what we are saying here in this first part of the capital accumulation equation. So the reason why this is new capital is because when we invest, we are basically buying new machines. And why do we buy new machines? Because we know that we have depreciation acting on old machines. So machines, unfortunately, don't stay new forever. They get used and they deteriorate, and eventually they might even break down. For the ease of our reasoning, we are going to assume that what we mean by depreciation is machines breaking down. If this is our depreciation rate, so this is our depreciation rate, 1 minus the depreciation rates represents how much of the capital doesn't depreciate. And this is exactly what we are saying with the second part of our equation. Because we are taking the capital stock that we have available from the current period. However, we are only taking the part of the capital that didn't break down. So we are only keeping the machines that still work well, which is why we refer to it as the old remaining capital. So again, what are we saying with this capital accumulation equation? We are saying that capital tomorrow is equal the new capital, so the new machines that we're buying to produce our coffee, for example, the new coffee machines that we buy, plus whatever coffee machine is left from yesterday, right? From whatever coffee machine is going to be left that did not break down. So we are saying that capital will continue to grow as long as a specific condition holds, and this specific condition is that investment, so the new machines that we are buying, have to be greater than depreciation, so the machines that break down. Of course, if we buy more machines than the number of machines that break down, our total capital stock is going to increase. And now I have a question for you all to think about, because watching the next video. Will this capital stock grow forever, or will it reach a plateau? Stay tuned to see the answer to such question, and hence to derive one of the main implications of the Solow growth model together.